value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Looking forward to our chat.
Hilliard, the Toronto real estate market, the Real Estate Association tells us that they're hitting record prices for single-family homes and probably in the outlying areas. What about condos in Toronto? When you see the national news from Global, they show the Toronto waterfront, and it's still awash in construction cranes. Obviously, condos are being built. What's happening to them?
So it's quite a bit in that story. So first of all, the single-family homes, people are desperate to get some dirt and some land in their yard and all that, so they're paying up for that. The prices are similar to the peak from 2017, but slightly higher, so they call it a new peak. But condo prices are collapsing, and there's a lot of condos for sale. And as you point out, there's even more condos under construction. In fact, it's a record high level of in the range of 60,000 under construction. So if you take an average condo building being 200 units, that's 300 towers going up at the moment. Now, it just seems incomprehensible, but the number of cranes that are on the skyline in Toronto is something like 170 or something. So it's not quite as high as the number under construction because the CMHC starts counting them as being under construction when the building gets above ground level. So usually with condos, there's some parking below ground. That could take up to a year to finish, and then when it goes above ground, then they count it. So the crane doesn't go up right away until a little bit later on. So it's actually even worse than the 60,000 units because all of the buildings that have been started but haven't got to that point where CMHC counts them as being under construction are still to come. So it's absolutely phenomenal. There's so many condos for sale. There's so many condos listed for rent because people just can't stand the thought of selling them at a loss. And then there's people, everybody that's listing knows that you can buy condos 3 years in advance when they sell. They have to sell out 60 or 70% of the units to get their financing as a developer. So there's a 10% down payment, and then people can sell that assignment under assignment to the right to own that unit 3 years in the future. Kind of like a future on condo prices, if you like. And of course, people are desperate to get out of those now because they can see what's happening to the condo market. And there's been several kind of pauses in this thing over the last 5-6 years since I've been watching it closely. But this one is the one where it's not going to be a pause and then resume the upward track. This is the condo collapses here, and it's going to be brutal because you and I've talked before about the poor economics of condos as an investment real estate. So the land is the only part of the equation that actually goes up in price. The building itself, it actually starts to deteriorate and depreciate as soon as you move in. And so condos are almost all building, say 80, 85, 90% building in terms of the costs, and only 10 to 15% land. So the land can't possibly appreciate fast enough to make up for the decline in the value of the building. So people 10 years out, 20 years out, and these condos that are being built right now are guaranteed to lose money. Then that might be okay. Maybe they didn't buy it as an investment. Maybe they just bought it as a convenient place to live. But stories are told that how at least 50% of these new buildings are bought by investors, in quotation marks, probably more accurately, speculators. And speculators will run away if they can get out of it when the prices start to turn down.
Would you call the situation in Toronto a panic?
Well, I don't know. I haven't been to Toronto for quite a while, and I just what I read. But when even the Toronto Real Estate Board, which is notorious for putting a positive spin on everything, when they start admitting that prices are dropping, they're not telling you the full story. They're saying prices dropped 6% or something like that. Well, month over month, but that probably means that if you really want to sell quickly, you might have to cut your price by 30%. So there's, and one of the things that I have not seen mentioned, and I'm waiting to hear, because the price that they announced for single-family homes was over 900,000, just under $1 million in the Toronto area. So that's almost never going to be a first-time buyer. So the people that are desperate to say get out of downtown and move to a home on the outskirts, almost all of them must own a place already, and so they're buying, and they're potentially they'll have to sell. So are they buying first and selling later? Well, it looks like they are, because we know that condos are not selling. So the desperation or panic is maybe going to come, but it's not far off, because on top of all this, the COVID-19 recession, as we've discussed in previous chats, is worse than any of the recessions since the Second World War. It's worse than the 1981-82 recession, which was pretty bad. Now this one's taken over the lead position. So the other thing about this recession is it's probably going to last longer. So the average recession lasts 3 quarters, maybe 4 quarters, 1 year. Only severe recessions last longer, and the really severe recession might last 7 quarters. So this is one that's headed to be in that latter category.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, is commercial real estate across the nation in trouble because offices haven't reopened or only partially reopened? And many companies say they're just fine having their workers do their jobs from home because they don't have to pay for office space or overhead or heating or utilities, things like that, even property tax.
Well, there is trouble brewing in Toronto, Vancouver. The trouble has already hit Edmonton and Calgary big time. Calgary, obviously, that happened 5 years ago when the oil downturn started. And the vacancy rate is listed as being 25% in office towers in Calgary, but it's probably higher than that because a lot of the people that have leased have tried the idea of subleasing if they've got a 10-year lease or something. Well, technically it's not vacant, but they would love to get away from it if they could. And all of that was before COVID hit, and now they don't have as many people in the office, so they could reduce their space even more. So Toronto had been very low vacancy up until March when COVID hit. So we haven't seen fresh numbers out of Toronto, but I'm sure that there will be some vacant space. Plus, of course, a lot of companies, including the one that I'm with in the financial sector, are learning how well we can all do working from home. Now, there may be some problems that need to be addressed with productivity and that sort of thing, but generally, the work is getting done, and it's getting done very well, and there's been very few hiccups. So that tells the management of those companies, who are generally very conservative. If you talk about banks, for example, not like the firm I'm in, but a bank, they wouldn't have probably been willing to believe that some of this stuff could get done without using office space. But now that they've seen that it does happen, they're going to be sharpening their pencils and thinking it over. Well, in downtown Toronto, the banks occupy so much space, and head office space primarily, and if they can get away from that, they would love to. So commercial real estate, there's so many aspects to this. There's the shopping mall. So 2 big shopping mall companies in the U.S. went bankrupt this week, and not household names, so I won't bother you with names, but one of them owns 102 malls, and the other one owns something similar, a little bit less. And there's lawsuits and huge. There's going to be just a nightmare of situations, because with those big parcels of properties like shopping centers, there's a lot of lenders involved. There's not just one bank. There's commercial mortgage-backed securities. There's bundling. Remember from the Big Short how they had all those loans bundled together, and well, that's still going on, and a little bit different, but the concept is still there. So how do you get? It's really hard to deal with all those individual lenders who are, maybe there's hundreds of them in a bundle. So the only winners in that are lawyers, but the shopping center is probably not coming back, and there's just way too many. There were way too many shopping centers before. Some of the bankruptcies were happening before COVID hit, and so it's just accelerating. So and then of course there's small industrial places, which that might be a little safer. That might not be quite as vulnerable as some of these other places, and we don't know if the virus goes away at some point because of a vaccine or a cure or something. Maybe people would love to go back to work in an office away from home. But we'll see. I think it's we've had 10 years of change in 3 weeks kind of thing, or 3 months, I guess, in this case.
Yeah, and for a lot of people, their social life is their office comrades. You take them away, and all of a sudden they're cut off. They're their extended family. I got involved in Twitter because of the book coming out 5 years ago, and then a second edition coming out 2 years ago, and I just saw a comment on Twitter this morning saying that the action on Twitter is making up for that kind of water cooler chat that people used to enjoy at the office. And I remember thinking before this all happened, I went into the office several times, did some emails, made some phone calls, and at the end of it I thought, I could have just easily done that from home. There's nothing stopping me from doing that at home. I would have saved the drive and all that. So I didn't make the change before COVID hit, but then as soon as it did, I made the change. I was thinking, in my case, it would be permanent. And saving a bundle on parking. And I don't know if the firm will give me credit for not using the space. I don't think I probably won't be able to get that. I could ask for it, but I probably won't get it. But there are some advantages, that the extra hour to hour and a half, depending on how long your commute is you can get a lot of work done in that time. We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, do you hear a lot of employers or industrial operators wanting faster tests being done so they can get their offices or their operations back up and running at full capacity again?
I haven't heard that so much from employers. I think the people that are really, really pushing on that are the people in the hotel and the airlines and the travel industry, because it is really grim for them. I mean, you could see Air Canada and WestJet in Canada, almost every week, almost every day, coming out with statements and suggestions and sales and stuff. But they've got a lot of money. They either buy their planes and then they pay the interest on the debt to buy them, or they lease them. But they generally are done over many years. And so you just can't. They can lay off their pilots. They can lay off their employees. They can stop paying the landing fees at the airports. But there are some costs like the ownership or the long-term lease on those jets that they just keep ticking. And that's got to be really hard. With all these shopping, we were just talking about commercial real estate, and in Canada, all these regional shopping malls, the smaller strip malls and stuff, it's got to be desperately difficult for them, because a lot of their tenants are restaurants and fitness places, which they were reopened, and now there's been some outbreaks, so maybe they have to be shut down again. I don't know, but it's a difficult situation. And what makes it most difficult is what I highlighted in my books, which is the extremely high level of debt that Canadian businesses and Canadian households went into this with. It's never happened before. The 1981-82 recession, people had very little debt. It was a severe recession, but for other reasons. It wasn't related to the debt and the interest on the debt. The interest on the debt was really high, but the total amount of debt was quite small. So this time we've got interest rates really low, but the amount of debt is extremely high. So if it weren't for the fact that the government told all the lenders to just pretend that everybody's good for their borrowings, we'd be seeing massive personal and corporate bankruptcies right now. So the question is, do they keep deferring? In the lending business, they call it extend and pretend. So extend the loan and pretend that the borrower can make the payments, or do they pull the pin? And obviously we'll start seeing more bankruptcies, because the problem with extend and pretend on a long-term basis is the person that's borrowed, whether they be the business person or the household, they start to take liberties, right? They've got this money, this extra money now, and they should be putting it to debt reduction, but they realize, hey, the lender's not asking me for the money back, so I can use it to go on a trip. Well, maybe not go on a trip, but you know what I mean. They can do any number of things with the money, and so eventually, and then if it eventually goes, the lender never sees that money, so sometimes they have to force the issue before they get put in an even worse position.
Well, Wolf Richter was telling us that luxury car sales in the U.S. are up 20-25%. So for the people who are still working and relatively well off, they're taking this deferred payment money and using it as a down payment for some high-end vehicle.
Yeah, and there's a housing sale boom. I mean, it's probably not as big a boom as it looks in the headlines, but there's still something going on. People have this money. The mortgage debt growth is at record high pace. It's going up the fastest now. People shouldn't be fooled by that. Most of what that is the deferral. So when the deferral is made, and in Canada it was up to 6 months, that extra interest and principal gets added to the size of the loan, right? So people normally would be making these payments. They don't make the payments, so then the mortgage gets bigger and bigger every month that goes by. So that's probably most of what the mortgage increase is doing. The other part of it might be that people are paying down their credit. I've seen credit card numbers come way down, both at the banks and at big credit card issuers like Canadian Tire. It's a negative growth situation, so people are paying down their outstanding balances on their consumer debt, and maybe that's coming from the increasing their mortgage debt, because they certainly don't have the incomes right now to get extra money to pay down their debt. So it's the whole debt thing is the big looming thing that we don't want to talk about, which is we went into this with too much debt, and at some point, unless the government just decides I think in the past you and I've talked about this modern debt jubilee proposal by economists like Steve Keen, and but I don't think this politically that's going to happen. So if that doesn't happen, then there will have to be a reckoning with the debt, and it's been getting worse because the debt's been growing because people aren't making their payments, and of course, I'm sure there's some people out there that think that because they don't have to make their payments, the debt somehow is going away, but no, it doesn't work that way. The debt's getting added to your total outstanding debt when you miss your payments, and incomes are not getting higher, they're lower. So the ratio of debt to income is getting even worse, and it was already bad.
Calgary International Airport and the Coots border crossing between Alberta and Montana both have an experiment going on. Quick COVID testing for new arrivals coming into Canada. How's that working out, or how do they plan for it to work out? And does it give new hope for hotel and tourist operators across the country? Because places like Whistler, Victoria, Niagara Falls are also suffering from a lack of tourists.
Yeah, one of my favorite things to do, and I haven't done it for a couple of years, but is to go heli skiing. And I'd go to the heli ski lodge, and it would be half Europeans and half Americans. So I'd usually be the only Canadian out of 40 or 50 people. And so that particular company that I go with, they've sent out a notice saying they're going to do it just for Canadians only. They've got 8 or 9 lodges, and they're only going to open one lodge, and it's going to be for Canadians only, and the price is much reduced. So without those foreign people coming in, and of course it's because of the quarantine, right? They can't bring them in from Europe and then quarantine for 14 days. The heli ski week would be over. So and they're having trouble figuring out how to deal with the lodge. So I'm debating whether I'm going to go or not, but I'd love to go. But so things like that, I don't know that the quick testing is going to solve that problem. It might, and if it does, that'll be fantastic. But in the case of that particular application, it's probably too late for the season. People aren't going to all of a sudden start booking for January, February, and March to go skiing in British Columbia at a lodge because of this test. But I mean, again, we were just talking about debt. The Calgary Airport and the Edmonton International Airport, they both have massive debts in the billions of dollars. I don't know the exact numbers. I think Calgary is $2 billion, and maybe Edmonton's $1 billion. And they have no revenue because people are not coming in. I mean, they got almost no revenue, like 95% drop in revenue because they get paid by landing fees, parking, stuff like that. So they're desperately trying to find ways to get that volume back. Now, this debt that they have is private sector debt. It's not government debt, but the government, in the case of Edmonton and Calgary, was involved in backstopping it. So eventually, I'm sure it'll become a problem that the provincial government will have to handle.
Hilliard, thank you so much for chatting with us.
Nice to talk to you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You can find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.